This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And this is just another small step forward towards realizing the goal that I'm working towards, and that is taking my first payout on this Top Step account. So as of today, the net P&L is $806.12, and I'm telling you guys, all it takes is one good trade. I went in a lot of drawdown in the past 2 days, but you know how my mindset was. You know how I was thinking. I refused to dig myself in a hole mentally, and I refused to think that I was doing things wrong, and I refused to change things up just because I experienced 2 red days in a row. Now, I told you guys in the past, what would this do to me? I would get down, I would lament, I would sulk, I would feel sorry for myself, I would feel like a victim, I would feel resentment, like the market's doing something to me, and I would change things up, and I'd restart my model, and I'd start from scratch. What is that doing? It's just slowing me down. I could be profitable right now if I was a better loser, literally. But now I've gotten to the point where I have a process that is consistently repeatable, and all I do is show up and do the same thing day after day, and I know that in the long run, I'm going to net profit, which means my red days literally don't mean shit. They're literally just opportunities for growth, opportunity for me to go back in and figure out what I did wrong and how I can get better because of it. But all I have to do is show up the next day, do the same thing, and literally get an entirely different outcome, the outcome that I am looking for. You're just playing your cards, you're just playing your hands. A red day does not mean shit only if you have a process, you have a system, you have a model, and you're following that, and you know exactly what you need to do on a day-to-day basis. That's it. So now you can see that week after week, the equity curve is slowly climbing, slowly but surely. This is how this game works. You know, it's a really slow game. And all you do to make more money is scale up. Like right now, I'm a net profit only $800, but what does this look like if I'm trading 5 minis? Instead of $158, $225, and $145, it's $14K, $22K, $100 or $15K. All you do is scale up. That's it. So the Zealous score is also climbing too. Things are getting better, folks. Things are getting better, and I literally just do the same things day in, day out. This process, this exact process that I am showing to you guys. So let's get into it. Today's Thursday, the 25th of September, 2025. The net P&L is $420.78, though it should be $620.78. This was an extremely frustrating outcome for me because I left a lot of money on the table, which we'll get into. But let's go through the market approach. So, am I confident in my read? You can see that if you're following mine, you can see that I've changed up the optimal market approach. It used to be something along the lines of this, which I can just go to the previous day and show you what it looked like. How I feel, what's the draw, what's my bias, what setup am I looking for, and why. Now, I started a new process in backtesting. I'm backtesting like a motherfucker now because I've done the work to understand all my playbooks, which now I have to show you. Show you my Miro board. Now I have done the work to understand all my playbooks, all 8 of them, essentially looking for the same things, but in just little slight variations. I've done the work to understand all of them. Now I'm getting into a process of backtesting them and collecting data on them. And because I'm backtesting, I want to collect loads and loads of data. The process has to be rather fast. So I'm not going to sit there and do this entire daily template, right? I'm not going to fill out this entire thing when I'm backtesting. I'm not going to fill this out every single backtesting session. So what I've done is I've created a little shortcut, I guess you could say, or a slimmed down version of it called testing data. And these are the things that I just want to know from each day that I've backtested, and that's it. So I've taken this, I've applied it to the optimal market approach, and I've kind of made things a lot more black and white and just straight up and simple. So the first thing that I want to ask myself, am I confident in my read on price? Now today I was confident this should go lower, and I'm not looking to be a buyer at all today, though we are opening deep in discount. The market has done a lot overnight in pre-market. So typically when we do open up like this, we do see some kind of push back inside the range. But at the point, at 9:30, at that point in time, there was nothing in the chart telling me that I should look to be a buyer. So the draw, I was aiming for a return back into the daily BISI, buy some balance sell side efficiency, or last Thursday's low, which delivered. What playbook am I looking for? Which would be, I forgot to fill this out. But when I ask myself what playbook I'm looking for, I just put it right here. So the higher time frame narrative, to me, it is clear we've had a smart money reversal and we are on the sell side of the curve, running against profitable longs with speed, not giving them a chance to take off. So simply the market is just going lower. Market criteria, the market is down 200 handles before the open. We are set to have a large gap down opening. The volatility is very high and prices opening at the low a day. So I wouldn't be surprised by a strong rally back inside the range, but I'm only viewing that as an opportunity to sell. So my trade plan, this is where things get black and white. I'm not asking myself what setup am I looking for and why. I'm just saying, this is my trade plan. That's it. And just being very black and white with what that is really helping me improve my ability to execute these moves. I've been using this practice in backtesting, and it's working. My backtesting results are looking pretty damn good. So I want to focus on using daily buy sign belt, sell sign efficiency gradient levels to look for premium sensitivity around them on a push back up inside the overnight range that also fails to close the discount opening range gap. My focus is on selling rallies up and seeing if price trades the daily BISI as an inversion fair value gap. So if you look at my annotations pre-market, you see I have the levels of this daily fair value gap annotated, and I want to see the market show signs of resistance at them. That's basically what I'm looking for. And I'm going to target a run below this candle's low back into this, the lower daily gap. Long story short, that's what I'm looking for. So on the 4 hour, now that price is deep in the daily BISI, my plan is to see price use these levels as premium array, finding premium sensitivity around them for selling opportunity. And I have absolutely no reason to be buyer in this market at this moment. All we see is a large down candle going into 930. There's nothing telling me that I should be a buyer. Nothing telling me that I should look to buy this. So I believe price already has the ability to reach the next discount array, the daily BISI below / Thursday low. So you can see that I'm stating that I think the market is going to reach for this blue box that we have right here. On the hourly, my interest is in fading rallies up because I know there is going to be initial push up in the AM session. Now I was looking for that initial push up because we opened so low on the day, and I'm noting how the market's respecting the low of that daily gap on the 1 hour time frame. We can see that we have the close still inside of it. So I'm thinking initially the market's going to want to push back up, rebalance this range, test this fresh premium array that we've left on the drop down, and then go lower. But it didn't do that. And I had confirmation that the market was breaking lower right at the open, so that's what I ended up doing. And I'm watching to see if price rejects premium arrays that are in concert with daily PD array levels at the right time after price has pushed back inside the range. I'm watching a push up to sell, so I'm very specific, very straightforward with what I'm looking for in my trade plan and pre-market. So this is the gap that the market actually rejected. We're going to see why in a second. So pulling up the chart, I'll break things down for you, explain what I was looking for and why. So you know that at the open, going into the open, I was looking for a push up to sell, right? We didn't actually end up getting that. The market just dropped lower right at the open, right into the level I was looking for. So I was looking for price to deliver this. And I'll note that typically when we come to the 930 open and the market is in such a deep discount, we've had such a drop lower overnight, typically this is what it does. And this is what I was kind of noting. But at that moment in time, at 930, there's nothing telling me to be a buyer. But typically what it does do is drop into some discount array and then push up back inside the range when we've had a large move like this, especially when the daily is bullish, right? So that's why all I'm looking for is for the market to drop into this gap right here. That's it. Now the confirmation for the short would be the 915 candle close. Now admittedly, in hindsight, this is what I'm noting as a confirmation for this trade. But what really confirmed this idea for me was how the market behaved right at 930. So you can see the 915 candle trades up into the 15-minute SIBI, but it cannot even trade to the midpoint of it, and it closes below it. You'll also note that this 15-minute gap is in congruence, it's in agreement with the lower quadrant of that daily gap. So this level right here, shown on the 15-minute right here, the low of that is literally, quite literally, maybe by a few ticks, the same as the low of the 15-minute SIBI. So these levels are in congruence. And from what I learned last night in the ICT lecture last night, if you guys watched it, check this out. So I learned something new last night, and I was able to put it into practice today. If I go to here, go to my notes, go to, which one was it? It was focus on Forex. Check this out. Make this full screen. So how do you know which PD arrays to use / supercharged PD arrays? Check this out. How do you know which ones to use? You're looking for a blending of PD arrays and confluence of PD arrays in time. And if it happens to occur inside of old discount or premium wicks of candlesticks, you're going to have wonderful odds in your favor, seeing price action move like you want it to. Basically what he's saying here is you're looking for a blend of PD arrays in one area mixed with time. And if that PD array is something from the daily chart, that's going to be extremely high probability, which is exactly what we see here. This is a PD array from the daily time frame. It's in concert with a PD array on the 15-minute time frame, and we have time behind it, 9:30. So, and I'll just go ahead and pull up the recording, show the executions. Okay. All right. So explain the logic behind what I was looking for. Okay. So this is what happens at the open. Market opens, and I was so calm going into the open today. I didn't even know it was 9:30, and I was like, oh shit, 9:30 is here. Usually I feel a bit of anxiety around 9:30. But the first thing that we do is boom, large down candle. Just straight large down candle. Now I was looking for that push up back inside the range, right? That was my trading plan. So why did I end up selling the market lower right at 9:30? We had this huge down candle, okay? And the criteria for my bearish discount gap opening setup, this is what the market does. It will break lower right at 9:30. It will immediately reject the opening range gap or completely ignore it. The opening range gap, which is, and we had such a large opening range gap today that, and the move happened right at 9:30, so I don't even have time to annotate it. But here's your opening range gap. Right here. Adjust this. There is your opening range gap, which is simply the difference between where we closed yesterday in regular trading hours and where we opened today at 9:30. So, because I understand the criteria for my negative discount or bearish discount gap opening playbook, what the market is going to do at 9:30 is going to immediately leave the opening range gap. It's going to either completely disregard it or fail to trade up to the lower quadrant. In this case, what does it do? It just completely disregards it, right? Does not trade to the lower quadrant, just completely disregards it. And it's going to stay heavy, and it's going to clear the pre-market low. It's going to immediately clear the pre-market low like this, like we see here, right? Immediately clears the pre-market low, completely disregards the opening range gap, just goes after we have a large gap down opening. So all the criteria was there. Now what I saw around the pre-market low was, because the entry confirmation for me to take this is it has to clear the pre-market low. If I go to my Miro board, you'll see that's the case. If we go to the bearish discount gap opening playbook, right, and we look at entry criteria, immediately break lower and clear the pre-market low, fail to do a 1/4 closure and reject the fresh 1 hour SIBI. In this case, we had a fresh 15-minute SIBI, which I'll still count towards the trade. Moves that happen right at 9:30, they're going to reject the fresh 15-minute or 1 hour SIBI that's on the left side of the curve. Obviously, we're on the south side of the curve. If it's going lower right at 9:30, it's going to reject that 15-minute or 1 hour SIBI immediately like this. It's going to immediately clear the pre-market low. It's going to completely disregard the opening range gap. So it's checking all the boxes, right? And I've seen this kind of move before. So not only is it checking all the boxes for my bearish discount gap opening setup, I'm really comfortable with selling the market short here because I've seen it so many times, because I've done the work of figuring out what is exactly the criteria for that playbook. So when the market sits on the pre-market low like this, it doesn't clear it, right? But I'm noting how it just sits down here. I'm not seeing any responsiveness. I'm not seeing any sudden movement back inside the range. I'm not seeing displacement back inside the range. It's just kind of sitting down here. It's just kind of staying comfortable. It's not really going anywhere. So what does this tell me? Right then and there, I'm looking at this, I'm thinking, this shit is heavy. We're staying down on the pre-market low. We're going to clear this bitch. So another thing is, from my experience, and this is just simply from backtesting, literally just from backtesting and live market experience too, of course. But backtesting is where I really accumulate the experience because I am putting in the reps and I am intentionally learning from them. But I know that when we have a large gap open or gap like this at 9:30, we tend to leave it open. We tend to fail to close that gap. We leave the upper half open and this thing just melts lower. So what do? I'm confidently selling short that gap, noting how we're staying down on the pre-market low. I'm selling a drive back up into it, and look where my stop loss is. Does not have to go above the high of the fair value gap, does it? No, because my experience tells me that when this presents itself, we tend to leave the gap open. So my stop is going to go at the upper quadrant of that gap. And what happens? What do you know? It literally trades right to the midpoint, rejects the midpoint, and then it just fucking dumps. Like this. Now for my targeting, this is what I usually don't cover at all, which is maybe why I botched so many winning trades. Like I botched this winning trade. I left $200 fucking on the table, probably more than that. I think I left around $300 on the table simply because I failed to take off at discount array. Now the thing is I'm sure you guys understand how I felt while I was in this position. And you saw how the market behaved today at 9:30. It just went. It just went. So when the market is behaving like that at 9:30, how am I thinking? I'm thinking, oh my geez, this is going to be a large down day. I can hold this to the end of the day. This is going to pass my eval. All these things, right? This is going to put me up so much on the eval. And having all these thoughts in my mind simply because the market's breaking lower in my favor, and it's doing it with speed. It's doing it with a lot of speed, and it's looking really, really heavy, and it's looking really, really weak. So, I mean, look at the first 3 5-minute candles. Boom, boom, boom. Consecutive. Just down. Just straight down. I'm seeing this, and in my mind, I'm thinking, we're going lower. We're going way lower when I look at the higher time frame. But I'm feeling how I'm feeling in this trade, right? And I know that I need to lock in some equity, so I'm annotating discount arrays. If you look, I don't know if I can find it if I scroll back here, but what I did was, with the 2 levels that you see right here, right there, and right there. So the first one is going to be that daily BISI from a pre-market plan, right? This blue box is that same gray box on the recording. The second level is going to be the daily discount wick. So as soon as the market cracks in my favor and it's extremely heavy, and I know that I'm on side, I'm going to the daily time frame. I'm zooming out, and I'm thinking, okay, this could go beyond the target that I'm looking for initially in my pre-market plan. Where could it go next? So I annotate this discount wick. And I note the upper quadrant of that, it's in concert with half of that daily BISI. And I'm thinking, okay, I can at least aim for that. If this is going to be an extremely large down day, I can at least partial at this level because it's literally already cleared the high with such speed, distance, and magnitude that I know that we're going beyond that. So as the market's driving into the middle of that gap, taking a partial, boom, locking in equity, making it real. You got to make the money real. It's not yours until you close the trade, until you take off. So I'm trimming 1 contract. I'm holding 2. I'm letting it stay heavy. Noting a little bit of responsiveness down here. I take my second contract off on the following candle. Like this. As the market's diving down into that level, I'm locking in equity again. Right there. As it's diving into that level, boom, buy again. And then for the final contract, I'm thinking I can just hold for the end of the day. And that's the mistake that I made in this trade that literally made me leave $300 on the table. Okay, I had 1 more contract. If I just locked in the remaining 2 contract at this level that I know that the market could reach to with confidence, where do I finish? $5,100 on the eval. Instead, where do I close? $800. So what happens? Comes back, knocks me out, stops the remainder for break even. So I'm just doing something really stupid because of this strong tendency that I have to want to be perfect and demanding that the market give me exactly what I'm looking for. So I think that this is going to be an extremely large down day, and I'm thinking that I can hold that contract to the end of the day. The way that I've kind of conditioned myself to think when I'm trading in this kind of new way with this model is I want to catch the full swing of the day, right? I want to catch the real move of the day. But more often than not, I'm probably not going to be right about catching the full swing or the real move because the market can do something like this. We got a lot of volatility today because of the economic calendar. So whatever you think it can't do, it can do, especially when we have a high impact driver like GDP, something like that, that's going to allow the market to just do this. 200 handle swings back and forth, back and forth, back and forth. So that's one of the biggest lessons from today. Whatever you think the market can't do, it can do, especially when we have these high impact drivers. The second lesson that I learned from today is I've got to be conservative. The way that I want to trade, the way that I'm demanding the market give me exactly what I'm looking for, I'm making things a lot harder on myself than they have to be. In this entire attempt on this eval, I have struggled to capitalize on all the winning trades I've taken. Literally all of the winning trades that I've taken, I have not been able to fully maximize them on except 1. On 1, I was able to pull out basically everything that the market offered me before it reversed. So I have not been able to repeat that because I'm consistently demanding that the market just give me the full swing. So what I'm noting I should do to make change, to make a difference, is just to be more conservative. and just aim for the level that I'm confident the market could deliver. So I'm going to drop that risk reward ratio, right? Because I've conditioned myself to aim for these crazy R multiples like 10R, 15R, 20R, 8R, 6R consistently. And all that's doing is not allowing me to capitalize on my winning trades, and I'm giving back a lot. This should be a $700 day. I should be up over $400 on the week. Instead, I'm barely covering the drawdown that I incurred in the past 2 trading days and only coming out on top $145 because I'm demanding that the market is giving me these full ass swings. So I need to take a more conservative approach to my trading and just be consistent with what I know the market can confidently deliver or consistently deliver. So that's the lesson that you're going to see that I've written down for today. If we go to the lessons, end of day give back. I think I should stop holding for end of day swings and just start aiming for the objective I'm confident price can deliver. Stop aiming for the full swing. Stop trying to sell the high and get out at the low, and just take my piece of the pie. The main takeaway from today, just take my piece of the pie. This is a reason I am giving back and making things harder than they have to be. I don't need to get in at the high and get out at the low. All I should be doing is taking my piece of the pie and trusting my read on price and being confident in what it should do. So the real lesson from today is trust my read on price, have confidence in what the market should deliver, and just aim for that. That's all I have to do. Get in and get out. Just looking to take my piece of the pie, not the whole ass move. Be conservative. I don't need to sell the high and get out at the low. Demanding I perform this way is demanding perfection. Demanding perfection leads to frustration because outcomes like the one that I had today. $200 left on the table. And there you go. There you have it. That is the lesson from today. Be conservative. Just take my piece of the pie. So, outside of that, like I said, I'm back testing my model with this new level of understanding that I have achieved because of the work that I've done to understand all of my playbooks. Like this. And some of you motherfuckers think I'm doing too much. And honestly, I love when people tell me that shit. Because that just tells me that you're a lazy motherfucker. I'm sorry, but that's just how it is. If I want to be great, I'm going to put in the work that I know it needs to take to get there. Okay, I don't give a fuck what you say. I don't care if you think I'm doing too much. I know that I'm doing what I need to do to get me to where I want to be. So, tell me that all you want. I don't give a shit. I will work hard every day without fail. And I will wake up early, and I'll start work early, and I will go to bed late, and I will work late. I will work before the sun gets up, and I will go to bed when the sun is down. I'm just fucking crazy like that. I'm sorry. This is how I run. I run like a fucking machine. I don't stop. I keep going. I'm addicted because my body is full of passion. I have a passion for the markets. I have a passion for trading. And I have a very, very intense burning desire to be great at this. So I don't give a shit what anybody says. I'm going to do what I know I need to do on a day-to-day basis. And you see the results. Do you not see the results? Do I not get better consistently? Ever since I started documenting this process, what has happened? I have literally just gotten better over time. That's it. I'm not moving backwards. That's for damn sure. I'm only moving forwards. And it's because of the work that I put in every fucking day without fail. I've yet to come across someone in person. Now I see motherfuckers online who are way ahead of me, but I have yet to meet anybody in person, and I just thought of this recently, who has more discipline and more consistency than me. I'm telling you guys, if you want to be great, you have to run like a fucking machine. Success is subtractive. Meaning it's not about the things that you do, it's about the things that you don't do. There's a lot of things that I don't do that you do that put me ahead of you. For example, I don't have any social media on my phone. I don't go to bed late. I don't wake up late. I don't drink. I don't go out. I don't party. I don't have to have fun. For me, this is fun. This is a life of fulfillment right here when I am chasing my passion day in and day out and putting my heart and soul into this work day in and day out and working towards the man that I want to become. This is a life worth living for me. And you might call me crazy and you might call me insane and you might think I need some balance, but I don't give a fuck because I know what I want out of this one life. Motherfucker, you have one life. What are you going to do with it? I want to be great. I want to leave my mark on this world. I want to leave my mark on this industry. And that is exactly what I'm going to do. And my action supports that. I could sit here and say these things all I want, but if I wasn't doing the action to back that up, it wouldn't be worth shit. It wouldn't mean shit. But I could sit here and confidently talk about this because of the work that I put in. and because of the belief that I have in myself. But I only believe in myself so much because of the work that I put in. So you know where I'm going, and I'm going to get there. You better believe it. You better fucking believe it. We're doing the work that is required. Now, it's been a long journey. It's been 2.5 years. I still have not made a single dollar, but I know that I'm going to. I'm going to, 100%. Do you think you could talk like this, think like this, act like this, and not make anything in return? It just doesn't work like that. When you dedicate your life to something, you have to receive some sort of compensation. It only makes sense. So what's left? Just the time. That's it. Put in the work, let time do the heavy lifting. Now, I've done a lot of talking about myself, but maybe some of you need to hear this. Maybe some of you need to look at somebody like me and be like, damn, that motherfucker's doing so much better than me. Why? Why am I not doing that? I don't know. Ask yourself, why are you not doing this shit? Because you could be too. There's nothing that makes me different from you. Absolutely nothing. Besides the belief that I have myself and the vision that I have of myself. And just working towards that every day. That's it. There is nothing that makes me different from you. Absolutely nothing. So what are you doing? Unlock a new version of yourself. Get going. Get going. Stop fucking waiting. Some of you guys are going to hear this shit and get pissed off. And that's going to motivate you to make a change. Good. You need to hear it. So that's going to be it for this one. Talk to you tomorrow.